perfect time to bring on board and discuss long-term market outlook with Peter Elston. He represents Aberdeen Asset Management. Peter, good morning. Thank you for joining us. Peter, let me start with a very basic question. At Aberdeen Asset Management, what is your short-term market outlook, medium-term market outlook, and then long-term market outlook for India?
Well, if I might start with the long-term outlook for India, because that's the basis on which we invest at Aberdeen. We're overweight India. We have been overweight India for many, many years. And that means that we're very positive on India for the long term. We think that the key fundamentals for the Indian economy remain in place with respect to competitive advantages in the economy, with respect to the stage of India's growth. India is still at a very early stage of its growth trajectory. We think that India's vibrant democracy is one that will be a positive force with respect to India's future growth. Obviously, with respect to the short and medium term, there are some more serious challenges, and those relate both to what's going on outside India. The global economy still remains very weak indeed, and obviously the world is so interconnected now that has an impact on countries everywhere. But also there are challenges domestically with respect to inflation, with respect to issues on the balance of payments. We've seen India's current account deficit widen very rapidly in recent years, and we've seen foreign direct investment, which is crucial for any emerging country, starting to weaken, and that means that India is becoming a less attractive place to invest, and I think there are certainly challenges that the politicians need to face, questions that they need to answer. The big question is why has foreign direct investment slipped? Why is India a less attractive place to invest? Those questions will be answered, and action will be taken to address those challenges. In the meantime, I suspect that the economy and the stock market is going to remain quite challenged. But we've seen a sharp sell-off in the stock market. We've seen a sharp sell-off in the currency, and that often means that we can expect a reversal of those moves in the very short term.
Peter, you have a significant exposure to banks as well. What makes you so bullish in private banks when the economy is slowing down, investment cycle has slipped, and Indian banks are largely governed by corporate as well as and not really retail investors?
I think the first thing to point out about banks is that the sector can be a very good way of getting exposure to the long-term growth of a particular country. As I said, we're very bullish on the long-term prospects for India, and the banking system can be a great way to get exposure to that. But you have to pick the right banks. You have to pick the banks that are being run on a commercial basis. You have to pick the banks that are taking sensible decisions with respect to their lending policy. Do they have very strong risk management policies? Do they have good sort of credit assessment operations? And if you can identify banks which fit those criteria, then that can be a great way of generating good performance.
Peter, let's talk specifics, shall we? If I look at your last declared portfolio, you have a very large exposure to ICICI Bank. Now, what makes you bullish on ICICI Bank, considering that they have a legacy issue? They have exposure to textile, real estate, power, airlines, implying that in the near term for ICICI Bank, NPA management could be a challenge.
I suspect that NPAs are going to be a challenge for the entire sector in India. The non-performing loan cycle is one that is always going to happen in any banking sector anywhere in the world. The question is, should you as an investor worry about that cycle, or should you focus on the long-term prospects for the industry, as well as, well, more importantly, the long-term prospects for a particular bank? And we think that you have to focus on the long term, and you have to focus on those aspects of a particular bank which are going to determine the long-term performance, and that relates very much to management quality. It relates very much to the issues I mentioned earlier with respect to is the bank making sensible decisions? Yes, there may be certain sectors that ICICI Bank is exposed to that are facing challenges, that are becoming uncompetitive, perhaps. But we really don't think that as an investor you should worry about that. If you start to worry about that, I think you'll tend to miss what's important, which is the long-term outlook for the company.
Peter, you've been a buyer in Infosys. Are you not worried about the growth slowdown? The management guidance was lower than the industry average as well last quarter.
Well, again, I'm starting to feel a little bit like a broken record here, and I keep repeating myself in terms of this issue which we think is what people should focus on, which is the long-term prospects for a particular industry, as well as the quality of a particular company. And yes, Infosys is facing challenges, and I suspect that we would have to say that we've been a little bit wrong with respect to the sort of management guidance that has been given in recent quarters. But is the fundamental case for the company in question? And we don't think that is the case. The competitive advantages for the industry as a whole, as well as for Infosys, remain very much in place. Those relate to technical expertise, they relate to labour costs. Those, if anything, have become more positive given the depreciation of the currency. And in terms of the sort of company-specific issues, we continue to be very, very comfortable with the management of the company. We've met them countless times over the last few years, and nothing has changed. We do analyze every single one of their strategic decisions, and we're very sort of comfortable with those. That certainly doesn't mean to say they're not going to be challenged by sort of cyclical forces, but they can't do anything about those. So like us, they're not worth worrying about.
Peter, what are your thoughts on Indian consumer names? Are these good companies but expensive stocks to own? Because market insiders are telling me off late at Aberdeen Asset Management you have reduced your exposure to some of the consumer names.
They probably are on the expensive side. We actually reduced a couple of our holdings in the last sort of 9 to 18 months. Previously we'd felt that these names were reasonable value on 15, 20, 25 times earnings. That we're now looking more at multiples of sort of 30, 40, 50 times, whether that's Hindustan Unilever or Nestle India, etc. So probably is worth or was worth taking a bit of profit in those names. Having said that, you have to remember that in many respects, looking at the experience of other countries in this early stage of development, consumer stocks should be trading on 50, 60, 70 times, given that the next 15, 20 years will see them grow at an extraordinary rate. But that doesn't mean to say, of course, that you won't see these sort of shorter term forces as investors look at the earnings, next year's earnings, and say, well, yes, the stock is expensive.
Peter, if I look at your current declared portfolio, your largest holding is India's largest mortgage company, which is HDFC Limited. Now, you're also the second largest shareholder of HDFC Limited after LIC. Do you think HDFC is one stock which you own from last 10 years, you're unlikely to sell the stock for next 10 years?
I think it's extremely unlikely. We've obviously been holders of HDFC for many years. We've been pleasantly surprised by how well the company has performed. It certainly exceeded our expectations to the extent that we had them. And again, nothing has really changed either with respect to the long-term prospects for the industry or with respect to the quality of the management. It remains an extremely strong bank with an extremely strong deposit base and a very sort of sensible management with respect to lending policy, credit quality assessment, etc. So I very much doubt that we'll sell the company. We may well trim it or add to it to take advantage of certain short-term movements, but we certainly remain confident of the long-term investment case.
Peter, the odd sector in your current portfolio is cement. Cement lacks pricing power. It's still a commodity and it is a boring business to own. Why would you be bullish on this one?
Absolutely. We've always felt that it's a very boring industry. The value added tends to be quite low, and as a result of that, the investment returns tend to be quite dull. But dull can be a good thing. Steady investment returns can add a lot of value to one's portfolio. And given that there is absolutely no doubt that over the next 10, 20, even 50 years, there will be this extraordinary demand for cement. The one thing that is very obvious about India is this huge need for infrastructure. Given that you can anticipate good top-line growth for these companies, and although you may not have these very high returns on capital, if you've got good top-line growth, you will see reasonable growth at the bottom line.